to another video. Today we are going to take a look at the NASDAQ 100 because the Federal Reserve has once again spooked the markets. Now, if you are new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you enjoy the content, please smash the like button for the YouTube algorithm. And as always, just let me know down in the comments below exactly what it is that you'd like me to cover in my next video. Yes, ladies and gentlemen, we're back at the NASDAQ 100. Now, this is why it's so important that you understand fundamental data, because the headlines all over the news is reading that tough talks from the Federal Reserve rolling the markets, and we're going to speak about what that means. Now, if you have not been living under a rock, you obviously know that Powell is yet to testify today, I think. But yesterday we also had one of the Fed board members came out and they had a couple of things to say, and we're going to go over that. It was the Fed governor, what's his name, Brainard? Yeah, he came out yesterday. We're going to speak about that and how it's going to impact the markets. Now, as always, let's start with a technical analysis. Now, as always, this is why I say that you have to be reactive and not predictive. Now, we've spoken about many times that we could expect that pullback till there for the continuation. Then we saw this massive candle close and we thought it was going to go up. Then the fundamental data comes out and says, no, no, no. We are not going this way. We are going down. It's going to be good. It's going to be great. And we are going down. And now we can expect this continuation to the downside to happen, because I'm going to tell you exactly why we could see that happen. Now, first things first, if you start on the monthly time frame, what do we see? Firstly, we can clearly see how the market printed this level of support, broke below that, came to test it as resistance. The market is starting to melt to the downside. We also had that impulse. After that impulse, we got the correction, and the best way to measure that correction is by taking your Fibonacci from the high to the low of the impulse. Now, we had that 61.8 test Fibonacci, and if you adjust our Fibonacci to get our take profit level at the minus 27, so that is where we're going to look at selling the NASDAQ too. Now, if we drop down on the weekly time frame, what do we see? Now, firstly, we can see how the market had now tested and rejected the strong previous level of resistance, tested as support, formed a double top. Now, if you have been on the channel multiple times, I've spoken about how we could see the NASDAQ fall, and then at times, due to the speculation in the market, because there was talks about Russia and Ukraine that was talking, and we thought the market was going to go up, and then the Federal Reserve came out, and this is why it's important that we always adjust to what's happening in the market. I think I need to update my account there, but in any case, this is why it's important that we adjust to the market movement. So a lot of people that only focuses on technical analysis would have said, okay, but we expected the market to go up from a daily perspective, but the market's going down, and they go like, okay, but we don't understand why. And that's why it's important that you understand all the types of data as well. Now, if you look at the daily time frame, for instance, and this is a good example. So firstly, from a daily perspective, we can see how the NASDAQ not only once but twice broke above this previous level of resistance, tested it as support, broke above that resistance, tested it as support. And based off a technical perspective, we obviously expected the market to continue higher. But again, this is why fundamental data is important as well, because why? The markets were spooked to like crazy. So what do we have now? So now we can see how the market has just printed this information. After the information, you expect a pullback to the neckline before the continuation to the downside. Now, it's quite important that we do monitor this current daily candle, because if we do get a break and a close below this level, there is a possibility for the market to now print an overextended information and then pull back to the neckline before we see that continuation for the market to come and test this level over here. Now, it's important to note that we are retail traders, so most of us would probably look for short-term selling targets, and some would go, yeah, I'm not that clued up with that. So it's important that you do manage this as well. Now, the best way that you are going to approach the situation is by taking our Fibonacci from the high to the low of the impulse. So we can see we've got a 50% pullback lining up perfectly with that structure there as well. But we have to be reactive once again, because we do have a structural level over here, and I think we've got a 0.382 pullback that's lining up potentially with that structure there as well. Beautiful. Now, the best way to approach the situation is obviously to wait for the market to pull back into that level and then start looking for selling opportunities for the market to go and hit the minus 27 as identified from a monthly perspective. Okay, so we're done with the technical analysis. Next thing we are going to do is we are going to look at the commitment of traders. So what the biggest speculators are doing in the market. Now we can see based off last week's report, they actually came in and they closed 1,531 buy positions or long positions, and they added plus 1,276 selling positions. I can obviously see how the Nasdaq's currently melting to the downside, but if you're looking at this now and go, yeah, damn it, should I jump in? The answer is no, you don't catch a falling knife. So that's what we got from a fundamental or order flow perspective. Now next up, we are going to talk about this. So there was a tough talks from the Fed is rolling markets. Tough talk from the Federal Reserve is roiling markets. I thought it was rolling, Jesus. Here's what it means for earnings. Now it says here, aggressive talks from the Federal Reserve has taken up the market sector like the retail, home builders, and banks are sliding. Now if you noticed yesterday, we had the guy that came through, Mr. Brainard, and some of the things in San Francisco. So the Fed governor, Mr. Brainard, and the San Francisco president, federal president, which is not Powell, but it was President Mary Daly. They spoke yesterday, emphasizing that the central bank's commitment to fighting inflation through higher interest rates. Now, whenever the market hears about higher interest rates, they tend to get spooked by this, because higher interest rates means less consumer spending. So when interest rates increase, the CPI numbers drop, because consumers will not be able to spend as much. Yes, you might be able to see consumers start spending, and a lot of people say that, yeah, but we still see the consumer spending. Yeah, it's fine. Yeah, it's good. Yeah, you spend, it's fine, but you won't be able to keep up with those high interest rates as they increase. And they have mentioned yesterday that they are committed, listen to this, ladies and gentlemen, they are committed to fighting through inflation with high interest rates in the market. They also said that it is of paramount importance to get inflation down, and that comes directly from the Fed governor. Bernard said that it is important that they get the inflation down. Ladies and gentlemen, high inflation means, the only way they can bring the inflation down is by doing what? One thing. There's one thing they can do. It's about hiking interest rates. Interest rates encourages consumers to save, meaning the CPI goes down. That means inflation goes down, and that means interest rates goes up, and that means if consumers cannot spend, and tech companies listed on the NASDAQ100 generate an income based of how much money they make per month selling stuff to the consumers that will not be spending any money, means that they will not be making money at all. So that means they will not be making any money. That's it. And investors don't want to invest in people that's not making money. I also noted that raising rates is very important. Okay, it is what's necessary to ensure that, again, the consumer goes to bed nicely at night, not worrying about whether prices will be higher, considerably higher tomorrow. The C also said yesterday. So this is why you see this massive sell-off. If you've been paying attention to the news and you don't know why, well, look at your friend and tell him, you know why the Nasdaq's falling today? Because the Federal Reserve has committed themselves to hiking interest rates to fight this inflation here as well. And the first thing they do, ladies and gentlemen, is they run to the tech stocks companies, and they are all listed on the NASDAQ 100. So it is unfortunate that at this point that the inflation in the US is this high, but they knew this a long time ago, but they just keep bursting or blowing up the bubble to a point where it is now. And currently the Feds are forced to hike interest rates as well. And then secondly, well done on bringing to the US for bringing their unemployment rate down by 0.01%, but that's not enough to save your currency. So that's the update, guys. The stock market is gonna fall. I said that when the market was trading at that price. I made that video last week and I said the price were gonna fall. I'm not sure if anyone got into that, but you can go and watch that video once again. Now guys, I hope you're ready for this one that's gonna take place. I hope you are amped up for it as well. I want to say thank you so much for your time. Thank you for taking up the taking out the opportunity for watching the video. And as always, cheers for ears.